Watch out, excuse me.
5 years ago today, when speculators made fortunes.
It's the moment investors around the world wait for. Firm trades more stocks that we're going to hear or see.
21 million shares already.
Fed here a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between.
Because we're now down 10%.
And we're not getting the bid one.
Traders say this is the craziest day they have ever seen in these markets.
Trading. The art of buying and selling different asset classes in order to make some profit. Well, today I'm going to show you how to build a solid foundation within the industry and quite possibly start making some money from the markets. And no, this is not a get rich quick scheme. If you want to make money fast, click off this video now. This is a very basic guide and aimed at beginners who are looking to get started. First off, I want to help you build the correct mindset to be a trader. This is where the main man Mark Douglas steps in, the author of Trading in the Zone and quite possibly the best publisher of all things to do with a trader and his mind. Mark has spoken about the concept of FOMO within traders. Traders buy when the market is in a state of excitement, and this tends to be where people start getting greedy, while traders sell when the market is in a state of fear and anxiety. This concept repeats itself within the markets every single day, and to put it into perspective, we can see what happens after every large euphoric move takes place in the currency markets. Mark states that FOMO, fear of missing out, is the cause of this. The fear of being wrong, the fear of losing money, or the fear of missing out on a move. In result, the effect is you overtrading and making silly decisions with your equity. Understanding this as a beginner would really help you dial in the right sort of mindset to be more selective and choose trades with a higher confluence. If you want to look more into the psychological aspects of trading, I highly recommend you check out the videos linked in the description below. To put it straight, if your mentality is out of check, your trading experience would be quite similar to the casinos at Las Vegas. As a beginner, I wish I was told more about the psychology instead of the money. This would have fast-tracked my learning and profitability in the markets. But let's now move on to the material you should study as an absolute beginner. Firstly, you need to understand what type of trader your current lifestyle would allow. Can you become a swing trader who holds on to trades for several days to weeks, sometimes even months? Or a day trader who is more active on the charts and trading in and out within the day? Or a scalper who is looking to be in and out of the markets within a few seconds? This is crucial to figure out earlier on because this can help you build strategies around that time frame of trading. The first source I'd like to point all beginners to is babypips.com. This site is essential as it helps build foundational knowledge about the currency markets. You will learn the two most important aspects to trading, which is technical and fundamental analysis. Technical analysis consists of strategies to forecast the potential direction of the markets using the past market data, while fundamental analysis consists of diving into the macroeconomics, industry analysis, and just the process of breaking down political, economic, and social factors which are relative to a currency. You will also learn the three different types of market conditions: bullish, when the market is in a state of upwards volatility; bearish, when the market is tanking and pushing for lower prices; and lastly, consolidation, when price is stuck between a range and not moving higher or lower. Markets are always in one of these three conditions, and being able to analyze the condition of the asset class will help frame trades. Since we're talking about charts, we should also discuss the type of charts we use to read price. Candlesticks are the most commonly used chart type to analyze price and read the data. Breaking it down, we can see that there is also bullish and bearish candlesticks. The candlesticks are broken down into two parts, the body and the wicks. We can see the bearish candlestick has an opening, a close, a top wick and a bottom wick. For a bullish candle, the opening and closes are in different places, but the wicks remain the same. This is super basic stuff, and studying through the Baby Pips material will be enough for you to grasp this concept. We've spoken enough about the markets itself. As a beginner, you're probably already overwhelmed, but trust me, studying the material from this website will give you the best foundation possible. Now I want to move on to my favorite topic, risk management. This is something else that is overlooked by a lot of new traders. What if I told you, you could be a profitable trader just winning 30% of the time? Sounds ridiculous, but let me explain. If you start off with an equity of £1,000 and your win probability is only 30%, meaning you win 30 trades out of 100, while your risk to reward is only 3 to 1, meaning when you win, you've made 3 times what you've risked. While assuming in a year you take 100 trades and risking 2% per trade, this would lead to an average positive expectancy over the course of 100 trades. Knowing that I could still make money at the end of a year while also being wrong is the best thing I learned. It helps with your mentality a lot. You don't stress much about the losses. Although you need to acknowledge them and study what went wrong, you won't be put down by your losses because you know out of 100 trades, you only need to be correct 30% of the time. But as a beginner, your focus should be on playbook building a list of strategies and styles of trading. This is the main focus. Don't worry about the money because you probably won't make anything in your first year. But once you have a well-developed playbook and understanding of the markets, you will easily be able to build a strategy and trading plan to attack the markets properly. I could talk about more topics all day, but the important thing for a beginner is to study the markets and learn how they move. To give you a plan of action, your goals as a new trader should be study through the Baby Pips course, develop a playbook along the way of different market analysis methods and different fundamental analysis approaches, going into the markets every week and analyzing what happened after the fact. Don't predict the markets as a beginner, it would just hinder your progress. Once you have a good playbook, then you can start building a strategy to then predict and forecast the markets. Build a journal of this and it would definitely help learn the market movements. Note down when price moved fast. At the end of the week, journal down what happened in the markets. Note down why price moved fast here, what sessions price moved in, and why the move possibly happened using your technical and fundamental analysis skills. This is your goal for a good 6 to 12 months. Try build a thick foundation for your growth. The markets are here forever. There is not one opportunity, several come and several go. Don't become a victim of FOMO. With that said, I hope this helps someone get their trading career started in the right direction. Study this material properly and subscribe to my channel because I hope to bring more free trading related content in the future. Till then, I'm out.